Welcome to this edition of BullionMax, the podcast. I'm Mark Allen, along with our co-host, Sean Reynolds, who's the customer service manager for BullionMax. Hi, Sean. How are you?
I'm doing well, Mark. How about you?
Terrific. We have a returning guest, David Hunter, the contrarian. We're going to find out more about David. He's spent years, I think 40 years or so, David?
Yeah, 49 years.
49 years.
Yeah,
Almost
I'm an
fitting.
old geezer.
Wow. The name contrarian, my wife was always saying to me, "You're contrary." I don't agree with her. Is that where your name, your handle came from? Not from your
Yeah,
wife, but
yeah. Contrarian is really understanding that markets are, in very simplistic terms, markets at tops, the majority are bullish, and markets at bottoms, the majority are bearish, and quite large majorities in those two places. So what a contrarian does is try to turn that around. So, we're in the classic case of it right now. If you've seen some of the indicators lately, sentiment is as bearish as it's ever been. I mean, it's amazing. We're down, but we're not down 50%, and yet sentiment is down at levels that it was at in 2008. It's down at levels that it was at 2002, three, 1982. It just people are so worried about the Fed that they're really bearish. Now, the reason contrarian analysis works is because people act on their views. So if people are very bearish, they've already positioned themselves bearishly. And unfortunately, most investors see bearish sentiment and hear all the talk, and they get negative with the talk. And again, it's not a precise science, but I try to, sentiment is very important to me in a contrary way. So people are always asking me, what level would you, change your mind? When would you become bearish with everybody else? What if it goes to, new lows? And I go, that's how a technician works. He's saying the more the tape goes down, the more the momentum is to the downside, the more bearish I get. A contrarian is kind of the opposite because he's looking at sentiment. So I go, levels aren't what's going to determine it for me. It's what other analysis in my work is saying, hey, yeah, you've got it wrong. You've got to switch. And right now, that's not the case.
Do you think people are maybe oversimplifying what's bearish and bullish a little bit by looking at the obvious things as opposed to some other metrics, levers, things of that nature?
Yeah, well, having done this for almost 5 decades, what I'm seeing is what I see at every cycle bottom, or at least a market bottom. And it's human nature. People really are, and I say this all the time, people are really influenced by the tape. The tape means the momentum of the market. And so there are rationales for being bearish. I fully understand why people are bearish. I fully understand that they're hearing Jay Powell talk about a long runway of higher rates. They see the trouble in our economy and in Europe, and they say, I don't know if our economy can withstand that. So I understand the bearishness, but a lot of that is discounted. And that's where I think a lot of investors don't really understand the discounting nature of a market. Markets don't, it's like we keep double and triple counting the same problem, because it takes time. That's the other thing is markets and economic cycles play out over time. So traders, and unfortunately, way too many investors have, um, become, when they got into this business as a retail investor, they were taught to be, the more information that's available on our computers, the more they think they're on top of things. But what it's turned investors into is very short-sighted, very day trading oriented. So they count the same bad news over and over and over again. Well, it got discounted a while ago, and you're looking to take that same news we knew a month ago and sell it again because Powell spoke today. He said the same thing he said at Jackson Hole. He said the same thing that every one of his governors has come out and said they want people to understand that they're going to fight inflation no matter what it takes. That's his message, but that's in the market. I mean, so
Is
can
inflation then? Is inflation then? I've heard it called hyperinflation because the inflation we have is somewhat unique in today's market compared to 10 years ago or 5 years ago.
well, inflation's unique to the new generation of investors that weren't around 50 years ago. But I was on the buy side running pension money back in the early 80s when we had 20% inflation rates, and we had 15% long bond, and we had 20% T-bill rates. This is nothing like that. And yes, it's concerning because we went through, you know, almost 40 years of actually 40 years of disinflation, where rates ratcheted down from 15% on the 10-year down to 0.4% back in 2020, and have started picking up, obviously, up to over 3, but that's still very low historically. And inflation ratcheted down from 20% down to where it was almost zero, and now has had this sharp rise because of supply chain, because of all the money that was put into the system in 2020, 2021. So all those things are contributing to it, and people are rightfully concerned about inflation. The Fed's rightfully concerned because if inflation is allowed to keep rising, it really can damage an economy and get beyond control. So they are doing what they think they need to do to rein in inflation. Again, I understand that. It's not that I'm unaware of that. What I think is, and I talk about this a lot, the Fed, believe it or not, because I've been a Fed watcher since 1973 when I came into this business.
Right.
Believe it or not, through all the regimes, all the different Fed chairmen, Greenspan, Volcker, Chesley Martin, Arthur Burns, all the way back, one of the flaws in Fed policy is they don't understand the lead times, the leads and lags, what I call leads and lags to policy. So they've already given the medicine to turn inflation over, but they're waiting for the signs. Well, those signs are the leads and lags. And so by the time they get what they're looking for to say, hey, we did it, they've already gone way too far. That's why we have these boom bust cycles, is because they don't understand leads and lags. My bet is between now and the end of the year, the economy is going to be clearly weaker and inflation is going to be clearly down, as you see with oil prices. And they're going to, I don't know whether they're just going to pause or whether they're going to pivot, but they're going to have to respond because, we also don't live in a vacuum. Europe is in real trouble for a lot of reasons, Russia and Ukraine, among others, but also their green policy. They did some very stupid things that we're following their path in terms of, eliminating fossil fuels, as if you can do that and replace it with nothing. Or to count on an unreliable supply of natural gas that obviously is disappearing. So we have real trouble around the world, and the Fed is leading the charge in terms of creating that trouble by over tightening. So at some point, they're going to wake up. They're going to get a wake up call. I don't know what it will be. Will it be some financial accident? Will it just be finally realizing that inflation, we could even see as early as, and I'm not predicting, I can't predict the month-to-month numbers, but CPI next week could come in surprisingly lower than expectations. And the market will see that as a real positive, saying the Fed's closer to the end of tightening than they realize. So that's kind of the things that will turn it. And the market, obviously, day by day, the market wants to try to interpret all the tea leaves and make judgments every day. Sure. And it's not how policy works.
So you may not know this, but as the host of BullionMax, the podcast, I have magical powers, and I'm going to make David Hunter in charge. What would you do if you were in charge? to combat inflation, to make the economy robust?
Yeah, like I said, I believe the medicine has already been given. I think the Fed has already done enough to create a recession. I think we're in recession, and create a hard landing. And a hard landing will destroy demand. It's already happening in oil and gas. It will destroy demand and send those prices sharply lower. I'm expecting $60 oil. That could happen in the next few months. That's a huge change. We were at 130 on when Russia invaded Ukraine.
Right.
From 130 to 60 is more than 50% down. And let's say that's a forecast, but we are at close to 80. 130 to 80 is $50 drop in price,
It's a
and yet the
lot.
Fed's acting like nothing's happened yet. And there's lots of people calling for $200 oil and things. I don't believe that. I think the demand destruction that we're seeing is going to send oil lower. I think the medicine that the Fed is giving the patient is going to cause a hard landing in the economy. And I think it's already done. I mean, I'm calling for a global bust next year. We're at a point, again, economies move gradually, so it's not and over time. So it's not that the bust is going to happen in the next 2 months, where you first go into recession, and then you find out that it's a bad recession, and then you find out that there's a lot of financial stress out there that turns into a crisis. So I think we have room in the next 4 months if the Fed, and it's not even the Fed, if the bond market pivots, and that's my call. I expect 10-year rates to fall to 2% before the end of the year, and maybe even a little lower than that. If that happens, that's a 125, 135, 140 basis point drop in 10-year. The 10-year is used to price mortgages. The 10-year is used to price a lot of loans. It's more important than what the Fed is doing on Fed funds. So the Fed can have its view. I don't really care, because the market's gonna see things before the Fed, and it's gonna pivot. So I believe a bond market pivot is about to happen. We had a run up. I when we got down to 250, 255 on the 10-year a little over a month ago, I said we can go back up to 320. Well, it got up to 335 last week, and people panicked and said, we're going to new highs on rates. Here we go. And now it's, kind of overshot, but now it seems to want to reverse. If I'm right on what I see, that spike in rates is behind us, and we're going to see rates come down over the next few months. And I think that's very bullish for the stock market.
Let's take a time out and just ask Sean, as all of these things, inflation, interest rates, are impacting the market, what are people asking you when they call in to buy precious metals, especially gold and silver?
The main question I get is, how do I do this? I know I want to. How do I do it? So they are aware of the current financial situation, and they understand their spare dollars that are hanging out are subject to, some of them feel withering and dying. I mean, that's how much of the message that they've received. So whether that's true or not, it really is, how do I go about doing this? I've never done it before, or I did a long time ago, or my husband dabbled in it. We got divorced, or he passed, or that was the situation of a woman I spoke with this morning. It really is very straightforward. BullionMax is a store, and it's a place where you can purchase your precious metals, and we ship them to you. You hold them. So really, once you figure out what it is you want to purchase, and we certainly can help you with that, then as far as that goes, that's our job. So once we get you educated, you're good to go to make your purchases, because it's for you and for your investment.
Thank you for that. It's always good to know what people are looking for as they're starting to invest in precious metals. Our guest is David Hunter, the Contrarian, and we've been talking about a number of different things. You know, the market is confusing to me, always has been, by the way. And I've been talking about the market for years and years and years, off and on. Uh, Today, as the market opened, it opened down 200 points. Then it was up 100 points. I don't know where it is now. Is this important? Does this affect each and every one of us in this country?
Well, as I say, I'm not a day-to-day trader and or even a week-to-week trader or even a month-to-month trader. It's unfortunately people, as I said before, are conditioned to think more information is better and following markets minute to minute is better. I think it's the most counterproductive thing people can do. And so you're going to have volatility intraday, you're going to have volatility daily and weekly. Yesterday the market was up, the Dow was up almost 500 points, and Nasdaq was up whatever it was. So you take a step back in the beginning of today, and then you come back. It's a stair-step process. I think people are not getting the information they think they're getting by following it day to day. I often tell people, turn your screens off and come back in 3 months. It's really seriously,
Yeah.
it's the most counterproductive thing you can do because you're acting like whatever the market does today is giving you information to judge tomorrow, and it is not. Certainly, when you're in a bear market or a correction, you feel like you want to watch it and see what's happening because you're nervous. But in effect, really my view is investing is not trading. It's really longer term, and certainly for me, everybody does it different. There are good traders out there that do it, but for me, I'm a macro strategist. The stuff I look at is quarters and years, not weeks and months,
You're
and
looking
certainly
at
not daily.
you're looking at as a macro strategist, you're looking this way, where a micro is this way.
Yeah, they're just very hyper focused on very short term, and I just keep saying, particularly when sentiment is this bearish, all that's going to do is turn you more bearish, and maybe at the very wrong time. I can't stress enough. This is probably the most consistent thing I can say about 49 years of observing markets and investors is the market loves to get investors to bail out right at the exact bottom or right at the exact wrong time. Happens every cycle. So, it's so easy to hear a story, like the Fed is going to tighten even more, or inflation is going to be even worse, and bail out on that, and then find out a week later that that was the bottom, and you bailed out right at the bottom, and then you're stuck kind of saying, what do I do? Some people might come right back in if they're traders, but a lot of people sit out and miss a big part of the move just because they got you know investing and markets are driven by psychology.
Mhm.
Certainly fundamentals matter a lot, but psychology matters a lot too.
What about gold and silver and precious metal investing? Is this a good time to expand your portfolio?
Yeah, I can't talk about investing. I can talk about what I see in the gold and silver market.
Sure.
People have to make their own decisions on whether it's a good time for them or not. What I can say is I do think that silver and gold represent probably some of the best value in the marketplace that they've had in a long, long time. The dollar really hit the metals. The dollar once Russia invaded Ukraine, I think the dollar was 95, and it's gone all the way to 110. That's a huge move in a currency, huge, and it happened in
Mhm.
6 months' time. It has hammered the metals. I think the dollar is peaking. There's lots of people who disagree with me, but I think the dollar is peaking, and I think that and lower interest rates are music to metals. I mean, they are the things. If you want to know the two ingredients that should drive metals, it would be a lower dollar and lower interest rates. And I think we're going to get both of those just ahead. So, I can be wrong, but again, I'm not trying to predict the next day or
Sure.
week either. So, but I do think there's big upside ahead in gold and silver. Think about it. The metals, we're in a period where inflation has broken out after 40 years of being contained. The metals are very, very much a place where you benefit from inflation. So, not in the short run because the dollar was strong, but once the Fed pivots or once the bond market starts coming down, the rates start coming down, you will see a different mindset in metals. So I believe we're at a major bottom. I mean, maybe a bottom that we won't see for the rest of the decade in
Wow.
both gold and silver.
I saw a news report this morning about the pound, the British pound versus the dollar. It is um, uh, at one point it was equal. Now I think it's gone down. It's at the lowest exchange rate uh, in since the '80s, mid '80s.
Yeah, it's Britain's going through a lot of trouble. You know, Brexit didn't Brexit, I think, is probably a good long-term strategy, but now, they're on their own really, and that becomes an issue in terms of what what kind of trouble are they going to be in if we're going to see a pretty dire situation in the winter with fuel prices and heating costs. The consumer over in Britain is not in great shape anyway.
Right.
So that's an issue. But again, I'm not sure we're going to see a lot lower in the pound. I think you may be looking at a major turnaround here shortly because all the bad news has been thrown at it. And it all really, because you can say the same thing about the euro, which is broken parity. You can say the same thing about the Australian dollar, the Canadian dollar. All of these are the alternative, the counter trade to the dollar, to the US dollar. So we know the dollar's been very strong. And I think the dollar is ready to roll over. If that's right, all these currencies are ready to go in the other direction. So, I would just caution that it's easy to get caught up in the momentum of the downside momentum. It's been a rough ride in the pound sterling and in the euro for a while. I think you could get a pretty sharp reversal.
We have a global economy. It's not the American economy anymore, or the British economy, or the Japanese economy. It's a global economy. So if it happens there, it's probably going to happen here. Is that
Yeah, it's hard for me because I have the most dire forecast on the street for the economy in 2023. I'm calling for a global bust, and that's words get thrown around, and people don't really understand what the words are. We have not had a global bust in the post World War II era. We came close in 2008-9. If that had been let to go, we would have seen what a bust is. I think this is worse than 2008-9. Not necessarily for U.S. banks. They got hit hard there, and they're probably in somewhat better shape than banks around the world. So the bigger problems this time around are probably in Europe and Australia and Canada, et cetera. But the U.S. is going to get hit hard too. But what's hard is, I started talking about a gold bust a long time ago because I saw the leverage in the system, and I said when the next cycle ends, it's not just going to be a recession; it's going to be a bust. And a bust, by my definition, is something worse than a recession, but not the length of a depression. So most of it gets encapsulated within a year. But it will be, 2008-9 wasn't that long ago, so people can see, it will be that kind of an event where you don't know what's going on. One bank after another is looking like they're going to fail. That's when I can predict with 100% certainty central banks will be coming in with both feet and rescuing banks and rescuing the system. A lot of people think we're going to have that accident before the Fed wakes up. I think there's going to be smaller events before that are going to wake them up. But like I said, the bond market's already telling you, at least in my reading of things, it's on the verge of rates coming down, and that what it's telling you is the Fed's already done its job. Inflation's already rolling over, the economy's already in recession. But it is hard for me because I have this so-called melt-up forecast, which is
Right.
one final leg up to 6,000 on the S&P, and people think I'm nuts. Everybody's bearish, and I'm out there telling you not only is it going up, it's going up to massively new highs. And yet, I think as soon as next year, we're facing the worst economy since the Great Depression and the worst financial crisis maybe in history. So it's not that I'm unaware of the risks. It's just, I guess I've spent enough time in the markets to know it doesn't all happen in a straight line. And there's the positioning right now is as bearish as I've ever seen it. If a little news comes in that triggers a reversal in thinking, you'll be amazed to see the power of that reversal in positioning. That's the thing that I think people are underestimating is there markets can get very illiquid in both directions. And I think we're about to see what that illiquidity does when people have to race back into the market because they say, oh my God, I was so sure that when the market hit 4,300 and the 200-day moving average, a few weeks ago, I was so sure that was the end of the bear market rally and we're going to new lows. If the market in the next few weeks goes to 4,600, which is kind of what I think might happen, once it blows through that 4,300 moving average, all those bears are going to say, whoops, maybe this thing has legs. And you're going to see a lot of money come in from the sidelines, not all at once. It'll start with short covering, and then it'll be, some of the people that are willing to dip their toe in sooner, and then the tape will just drag more and more people in as it goes up. So you can have a buying frenzy, and nobody can see that right now because everything's so negative.
And then at one point it goes away. It crashes. That's the melt
Well,
up, and
yeah,
then
it's
it
not
comes
at one
down.
point. It's not like we go to 6,000, you touch it one day, and then you're at 4,000 the next. It's not that. There will be a topping process. My numbers are not meant to be precise to say
Right.
we're going to 6,000. On the day it hits 6,000, you better sell everything because it's going down tomorrow. We could go to 6,500. We could go to 5,800. 6,000 just a general area of where it's going, and I'm pretty sure it's probably going to exceed 6,000. But it will probably fool around up there for a little while. There'll be enough, and I can pretty much tell you that at 6,000, I'm going to be turning bearish, and not turning, but talking very bearish, and what's ahead. And I'm going to get the same criticism of my call being bearish as I'm getting now for being bullish. Again, at the top, you're going to have all kinds of rationale why I'm wrong, why this thing has legs, why the bear market's over and the cycle, we're the Fed's on our side now, so there's a big long cycle ahead. You'll hear all of that at the top. That's what makes it so hard to get out at a top or a bottom. At the top, everybody's going to have a rationale that makes sense for why you should buy. And at the bottom, everybody's got a rationale for why it's going lower and why you should get out. So it's just investor psychology.
David, we're gonna let you go. Will you come back? It's been a couple of months. It's been more than a couple of months since we talked to you last time. You always have such good information and presented in a very consumable way. So it's easy to understand. So we'll talk to you again in a couple months, a few months.
Yeah, I would say as we get close to the end of the year, there should be a lot to talk about. It's the next 3 or 4 months, I think, is going to contain a lot of interesting times.
Got it. Our guest, David Hunter, and if you want information on David the Contrarian, we've got how to look at his blog on Twitter. It's been up throughout our conversation. David, thank you very much. We're going to take time out for just a second, and Sean and I will be right back. Let's spend a couple of moments with Sean Reynolds, who is our co-host, as well as the customer service manager at BullionMax. Sean, uh, I asked you earlier in the show what people are asking you about. Um,
Mm-hmm.
when they call in. We know that education is key, and that's
Mm-hmm.
the uh, the basis of BullionMax, educating people about purchasing precious metals. What are people looking at? What are people looking at? Uh, Either rounds or something pretty from the Perth Mint or Canada. What's
Most
going
of
on?
the people who are looking at investing and hedging against inflation are looking for ounces. So they want to collect as many ounces as they can as affordably as they can. So the question that follows just as quickly as how do I do this is what should I do? And the two really go hand in hand, and it really depends on the goals of the individual. I have some people who don't have a whole lot of money but are pretty insistent on purchasing gold. Okay, it's going to take them a while to amass amounts of gold with a small budget, but they're committed to it. So, I make recommendations of some products that will help them get the most metal for the money. There are some people who are like, wow, silver looks like it has a great opportunity. Would I look at something that would be less than a full ounce? And at this point, with premiums as high as they are for gold and silver, boy, uh, I've seen 10th ounce silver rounds. We don't carry them, but I've seen other people carry them for, they look like mercury dimes. They carry a premium of about $5 for each one. So you're paying
Whoa.
$50 over spot plus the market rate. So you're paying $70 for 10 little 10th ounce silver pieces. Okay, as an investor, I don't see how that would help you. In the long run, you really are watching your premiums versus your ounces. And there are some things that really aren't part of a good investment strategy. So when people ask me that, I let them know about that. 90% silver or junk silver, I hate that term because I love old
Yeah.
currency, um, falls into that category as well. But if you don't already have it, it too carries very high premiums to get those old dimes and those old quarters and 50-cent pieces and whatnot. I think people are preparing for bartering, trading those dimes and quarters to get their groceries and things of that nature. We have no idea what the future holds in terms of what that looks like. I
Sure.
I envision something like, okay, I traded in a couple of ounces of silver, and now I have this card with digital money at my favorite grocery store, so I can spend my silver there. That seems more likely to me than all of a sudden, people have scales out, and it's like the old west, and we're weighing metal and things of that nature. Um, if we're anything as Americans, we're practical. And I don't see anything practical about that. But I also don't have a crystal ball. I don't know. And that's why when people want to do certain things, I will never talk them out of it. I will let them know what they're either giving up on or what additional expenses they're looking to take on if they choose to do that. And then it's up to them to choose to do that. And that's what I really like about my role at BullionMax is I'm not a commission guy. I'm a salaried guy. So it's not in my best interest to lead you to things that are more expensive. It's in my best interest to have you as a long-term customer and make sure we're helping you meet your goals based on what your needs are. Your needs will never be my needs, and my needs will never be yours. So it really is about getting people to make those decisions on their own.
Well, Sean, as always, thank you very much for joining me here on BullionMax. And I think people should subscribe to us.
Yes, it's as we do each of these, there's always some little takeaway, whether it's about how to approach investing or another voice about talking about the economy and inflation and things of that nature. I'm really happy with how things have been going so far, and I always look forward to recording the next one because I learned something too, even though I'm part of it, and that's kind of fun, and I hope it's fun for our viewers as well.
Yeah, I agree. So if you want to subscribe, you can just hit the button that says subscribe here on YouTube.
It's that simple.
It's that simple.
Well, do
Very,
it, man.
very
Do it.
easy.
Subscribe.
Even we can do it.
Hey, if we can do it, all right.
If we can do it, anybody can do it. Well, I thank you again for tuning in. Thank you, Sean. Thanks to our guest today, David Hunter. I'm Mark Allen. We'll see you on our next episode. Bye bye for now.